Hey, video message to all my investor friends out there. Congratulations for being part of our funds. This is our 7th fund now. 4 and 5, number 4 and 5 are still open for accredited and non-accredited investors. If you're looking to put more in, you can do so. But what I want to do in this video message to you this month, about this time of each month, we send out our checks distributions, either our monthly report or a quarterly report. So what you should be getting is an email from, in this case, I'm going to show you some emails that I have. I'm going to not disclose the email address, but these are coming to me because I'm an investor in each one of these deals. So here's one, for instance, new document for a reserve at Port St. Lucie. This is one of our first funded deals. And it's going to look like this. If you can see, if you can pull in this is our annual 2018. So here we are in February. We're sending out our annual report for last year. Reserve at St. Lucie. Purchase price 19.2. All this is very professional. Initial loan was 15 million. Our loan, by the way, we got a great loan on this deal, 3.9%. 5 years interest only. So from now until, I guess, 2020, what is that, 4? 6? No. 21 will be interest only. Current fair market value of this property based on its operations, $29 million. Now on this particular deal, investors have received, you'll see it right here, we send this out. Again, we've been approved by the SEC for both Reg D and Reg A. Reg D is accredited investors, Reg A is non-accredited investors. $167 million has been funded in the last 18 months. On this particular deal, investors received $623,400 in distributions for a 13% return on their investment. The preferred return on that property is 6%. Okay, we delivered more than that. So you can go to Cardone Capital when you're on your website. If you go to cardonecapital.com, by the way, you're getting these emails, but you can also find, if I can find this real quick, you can find this on the website that was created and built. I can't do that right now, buddy. Excuse me. You can see all our deals sitting here, and you'll find this deal in there that looks like this. Okay, you can see your reports there, right, Ryan? All your reports are and everything are there. So that's one email that we sent out just this week. Give you a little bit of an overview. Reserve at St. Lucie maintain a consistent 97% occupancy rate, increased potential rents from $1,095. This is very affordable up the Gold Coast to Florida, $1,100 per month rents. We moved them up about $56, which is a 5.6% increase. And our NOI finished the year 6% over 2017. Remember, NOI, for you investors out there that you're getting this and you're like, how does all this work? NOI is what determines the future value of real estate. It's not like a house, like this big house that I'm in here in Utah. I mean, it's beautiful to see that. I don't know if Ryan can follow me. Right. This place is beautiful, right? But this property, its value will be determined by how much the next person loves it, not on how much money this place makes. If somebody comes in here and says, oh my God, I fell in love with this place. It's snowing, it's beautiful. It's got a swimming pool, it's magnificent. That's how homes are valued. But these properties that I'm buying are based on how much income they produce. Oh my gosh, I'm getting slammed right now. On how much income they're producing, okay? So these properties that we're buying at Cardone Capital, I love you too, Chan. These properties that we're buying at Cardone Capital are not based on the neighborhood or the comps or what the deal sold down the street for, or whether the husband or the wife walks in and falls in love. Oh my God, we're gonna go there and we're gonna spend every Christmas there and we're gonna spend the rest of our lives and we're gonna retire in Deer Valley and we're gonna overpay for the house. These properties, when I send you these reports, if you keep watching the NOI, the NOI and the stable rental income will determine in the future whether or not we can sell this for a profit in the future. So I know a lot of you have called Ryan and myself and said, dude, like some of your deals are paying 4.5%, 5.5%. Some of your deals are paying 10 and 12. Why is that? Well, because where are you getting in on the deal? Okay, like this deal right here, we've owned 2, 3, 4 years now, 3.5 years. It's maturing. The rents are maturing. Some of the newer deals that we're doing, we're moving into and we're buying them because we believe we're buying them below market value and that they're in markets where the rents are going to explode once supply gets consumed in the market. That's a complicated way to say, for instance, Houston are the properties we just bought in our Fund 4 and 5 in Delray and in Stella in Sugar Land, Texas. These are properties that we believe we bought under market, and as we look forward into the future, because of the quality of the product, I'm willing to accept less as an investor each month, because I know on the way out, 3 years when it matures, 6 years when it matures, when the rents mature, the value will explode, because values in this kind of real estate are based on income, NOI. Okay, so let me show you another one of these we sent out this week. If I can, Grant, let me find my emails. Why am I getting these emails? Because I'm an investor in the deals. Man, I get so many emails, my gosh. Okay, St. Lucie, here's another deal. Reserve at Port St. Lucie, a different deal. Or did I get 2 of those? Yeah, I'm invested 2 different places on that deal. So here's one, Ormond, okay, the Ormond deal. I'm gonna click on this, bang. You'll also find this at Cardone Capital. And this property looks like this. I'm gonna get a little bigger, maybe you can come in. Look, when I bought this deal, this is a 2003, 272 units, 1,100 square feet. It gives you all the data. We purchased it 2016. We give you a really professional report. Paid $36 million, financed $29 million. I did both. I did this loan, by the way. I negotiated the price. I negotiated the loan. I negotiated the rate. I negotiated the interest only for 5 years. We could have put more money down and got 10 years of interest only on that deal, but we didn't. I made a decision not to because the rate was low enough at the 4.09. The current market value on that deal, you want to zoom in on this because people aren't going to believe this. Now, I don't know that I could sell it for this today. I might be able to get more than that, actually. $46 million. We paid $36 million. The investors have been getting on this deal 11.5%. 2 points less than the other deal, by the way. And you're like, well, how do I get in on the first deal? No, that's not the way you look at real estate investors. You should be asking, how do I get in on every deal? How do I get on the one that pays 13? How do I get on the one that pays 11? How do I get on the one that pays 6? And why is Grant buying some deals that only pay 4.5 or 5 in the first couple of years? Because I know they're going to do this later, okay? They're going to mature and start doing higher cash-on-cash returns. Again, we're getting paid, this investor, if you notice right here, Ryan, I don't know if you can zoom in on this. Investors on this deal received last year, $961,000 is what we paid out in distributions on $7 million of cash. We paid out almost $1 million of the $7 million down back to our investors. Who's the first investor in all these funds? Me. Okay, so I built these funds. When you get these reports, just remember, that's how Grant gets paid too. I get paid exactly the way you get paid. Reserve at Ormond maintained a consistent 99% occupancy rate. That immediately screams, let's raise rents. And increase potential rent income from $1,100 a month. Remember that last rental property, the first one I did, was $1,000. These are $1,171 a month. And we moved them to $1,224. The other one we moved to $36. This one we moved $56. I believe this is what we moved them. Maybe I have that backwards a little bit, but again, if you're in both of these, you're going to get reports on both of these. Okay, you'll be able to see that, and then at the bottom of this, you'll see our total revenues. Again, zoom in. You'll see our NOI here. NOI determines future value, what somebody else can pay in the future to accept a 6 or 7 or 8% return. Average occupancy year in 99. This is a very stable property. Okay, how do you find these properties? You know, this is what people ask me, dude. How do I find those deals? How would I own those deals? Okay, well, you would have had to walk in, and you'd have to be in the market. They'd have to know who you are. You'd have to have $7 or $8 million of your own money. You'd have to know them, and they would have to know you. You'd have to be able to get a loan for $29 million. Like, it's almost impossible. Even if you had the money, even if you had the debt, if you don't know the broker selling the deal, you would never get this deal. So a lot of you out there are like, I'm going to go do this on my own, which great, go do it. I'll help you, man. I'll look at the deals. Maybe you find a deal that you love. If you do, and you're investing with me, if you find a deal you love and you can't do the whole deal, call me up. I would love to do a deal, just me and you. All right. But that's very, 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 very hard to believe that you've heard about a deal that I don't know about. But hey, I'm open to it, okay? Because you show me real estate that pays me to wait, and I don't have to have this kind of return. Okay, now watch. I'm gonna bring you to a couple of our newer deals. Ryan, I don't know if you want to move around. Maybe you just got comfortable there. You worked out too hard today, huh?
No, not really.
Here's another document. Okay, this is a deal. This is a great variation of deals. Some of you are in all 4 or 5 of our deals. We have 7 deals now. I think there's maybe 3 people that are in every deal that we've done. This is a deal called Woodway Square. Okay, I'm gonna bring you into the investor boardroom. I'm gonna see if I can find that deal right here, so to show you what it looks like. That would be, where would I find that? The fund, Ryan?
Let me see here. It's gonna go under offerings.
Okay. Oh, this is a beautiful property.
There we go.
Okay. Now this So Ryan's going to show you when you go into our platform, Cardone Capital. This is a multi-million-dollar platform right here that we deliver information to our investors. I'm gonna have access to some stuff that you might not be able to have access to, but certainly you get access to most of what I'm showing you right here. Oops. Let's see here. Why is it not letting me in there? Okay. I hate using somebody else's computer. This is Elena's computer right here. So I'm looking for our Woodway deal. These are all our deals, by the way. I have a complete history of all our deals. So again, our Woodway, which some of you are invested in, this was a $62 million loan assumption. It's in Houston, Texas. This is an off-market deal. I mean, this is a perfect example of what it takes to buy real estate. I showed you 2 deals that were brought to me by brokers. A third deal right here, Woodway Square. We spent 3 days in Houston, Texas shopping that market. There's a number of reasons why we actually have Houston on our radar, one of which is a very interesting concept. It is 50th on the list of cities in America for rent growth. 50th would put it in last place of the 50th largest city. So you're like, well, why would I do that? You know, back to this purchase. Why would I go to Houston? Why would I get on my plane, fly to Houston, spend a week when I just read a report saying Houston's the 50th city for rent growth in America? Either after 30 years, I don't know what I'm doing, or I avoid the masses and move to markets that aren't obviously showing rent growth, okay? But that I can sit and wait, because when the rent growth happens, what happens is in a rental market, when the rents are held down for long periods of time, they do, by the way. There's markets that we're buying in. We know, investors, that the next 2 or 3 years, there might be flat rent growth. Trust me, in the 4th year, it will pop. This is what rents do. They surge up. We were in a surge here in the last 2 or 3 years. They'll flatten out for a little while, let the market get used to it, and boom, they'll bounce up again. Here's 507 units. We did an interest plus principal on this. Now, the other loans that I showed you are interest only that I negotiated. This was a loan that we had to assume to get the property. And the investors don't know this now, but behind the scenes, I've been renegotiating a new loan. This is an annual, end of the year accounting of this property. Woodway Square finished the year with increasing occupancy. Houston market experienced a population growth of 3.4%. Almost 110,000 jobs were added. Now, those jobs, when people move into a new market like Houston, 6 million people live there, one of the biggest, 4th biggest city in the country. Houston's not going to go away. So what happens when people move in, they don't buy homes first, they rent first. Okay, Woodway Square occupancy, and you'll see it in our report. Again, we send these out monthly, a small report, and then every quarter we send out a bigger report. We went from 95 to 99% at year end. Includes a strong renewal rate. NOI exceeded budget by 5.7%. The $121,000 monthly principal payments, we paid down the debt by $1.3 million in the first year. Now, this property did not provide the cash flow of the other properties. We're at about 5%. You're like, why would I want to be in a deal at 5%? Well, I don't know if you would, but I know I would. Maybe you would. Maybe you wouldn't want it. Maybe you have a better. Maybe you have things that'll pay you more than 5 or 6%. But if you have dead cash sitting around, if you have cash just sitting around, right? Like these Queen Anne's. These Queen Anne's, they're sitting here. Guess what's going to happen to them as long as they're sitting there? Same thing's going to happen to your cash. Somebody's going to eat it up. Okay, if somebody doesn't eat it, somebody's going to use it. If somebody doesn't use it, inflation will destroy it. So I would love to be in this property at a 5% cash flow. This Woodway Square property. Why? 500 units, Galleria, Whole Foods next door to it. Across the street's $3,200 a month rents across the street. Our rents here are, doesn't show on this report, but what?
$1,450.
$1,400. Across the street, $3,200 a month rents, $800,000 townhomes, and $1.5 million homes in the same neighborhood. So also outlook and recommendations on this are debt. The investors don't know this right now, but I'm renegotiating the debt to go interest only, and it's going to kick up our cash flow. Okay, that's another deal. Let me see what else I got today. Again, why am I getting these reports? These are not reports that I'm making up. These are being sent to you today. Make sure you're reading the report. If you have any questions, you can always call myself or Ryan. Here's the deal, Murano. This is a great example. I'm showing you one property is 20 years old, another one's 15 years old, another one that's like 2 years old. Okay, Murano, Orlando, Florida. It's a $50 million deal. Okay, we financed $33,500,000 at a 4% interest rate, 3.99. Payments for 5 years, interest only. Maturity date's 2028. Somewhere between now and then we'll sell this property. Current market value, we're up 50 grand. Whoever did put that, that's just ridiculous. Again, this is a bit, this is just speculation, what it's worth. Now, how do we figure that out, that current fair market value? Because we're in the market looking every day at property. So right now, we paid $208 a door for that deal, right, Ryan?
Mm-hmm.
I think that property's probably worth another $12,000 a door, easily. Meaning we would make, this would not be the actual value, the value would be more like $52,600. I think we're in the money on that deal by $2.4 million, but look what our investors were paid in the first year. We took this property over at 92%, and we had it at 97% by the year end. Now, we did have a couple of weird things that had happened at this property. People are going to love this video, by the way. Look, folks, I've been doing real estate for 30 years, okay? This content is free to you. I'm going to put this actually up on my YouTube channel. Even if you guys aren't investors, you can see what I'm doing. Maybe you want to go out and raise your own money. We've raised $167 million in 18 months, less than 18 months. I bought over $1 billion worth of real estate. We currently own and operate $900 million worth. I'm not bragging about any of that. I'm telling you, like, if you want to learn this game, this is what it requires. You could do what I'm doing. Now check it out. Some things that happened on this property that have never happened to me before. Number one, we had lightning strikes at this property. It's a gorgeous piece of property. You'll see it here when you go to CardoneCapital.com. CardoneCapital.com. Where's our Murano deal, Ryan? It's going to be...
Should be under Fund 3.
3?
Mm-hmm.
Oops.
That's right.
Let's see. How do I find the pictures, though? I want to show them the pictures.
Mm-hmm.
Well, here you go. Here's a picture of it right here, okay? And then you may hold this. You may hold it while you do. I don't know why Elena's computers. Elena's one of our investors, by the way, in this fund. And Murano. No, not that one. Is that it? Oh yeah, I guess it would be that, right? Yeah. It's 2 properties. There it is. Isn't that beautiful? You got more pictures of it?
I think so, yeah.
Okay, bring them back to Murano. Well, let me tell you some things that happen on Murano that are crazy. Okay, I'm gonna give this back to you, okay? This is a $45 million fund, by the way. This is closed. You can't invest. This is closed.
Correct.
Yeah, I don't know why we have. Oh yeah, it says right here, closed. Okay, so we bought two deals here. One was Woodway Square in Houston, and the other is Murano. Now, there's some things that happen on the Murano deal, and you can see we target a 26% preferred return investors. Where's my 6%? It's so funny, man. You guys are funny because you're like, well, where's my 6? Dude, it's a preferred return of 6%, okay? Which means me, number one investor, and you, second, third, fourth, fifth, down the row, all of us get treated the same way. We get a preferred return before the management company, before Cardone Capital benefits from any profits. A 6% is distributed to the investors. Who's the most important investor? I am. I am the first investor. All investors get treated identical to me. So why I say I'm the most important investor is because I'm the first one. I'm the one that bought the deal. I financed the deal. And all investors basically have the same documentation that I have, my twin brother has, my sister has, Ryan's invested with me, that he would have, or any of my friends, executives, etc. If you don't know me and you're invested with me, guess what? You get the same deal I get in these deals, okay? So this deal, we have a preferred return of 6%. We have an internal rate of return of 15, okay? That means that I expect on these deals, I expect to make 15% per year by the time I sell that deal. Okay, remember those other deals I showed you in the first part of this video was paying out 13%? Same deal that we promised our investors, 6% preferred, 15% internal rate of return. Those deals are doing 13% every year already before the appreciation of the property. We just go into this and we say, okay, we love this property. We know it's in a good location. We know the problems with it. We know the challenges with it. We know Orlando's a good market. Houston's a good market. We think we're going to earn 5 or 6% the first couple of years. And then somewhere over 3 years, 5 years, 7 years, bang, all of a sudden the rents explode. Somebody comes along and pays us for the increased NOI, at which time we will sell the property for a profit, distribute everything to the investors, and we think that that'll be 15% or better to each of our investors. Again, you can never make any promises to anybody. There's risk in everything, which brings me back to the thing that happened on this property that has never happened to me before in 30 years. We had lightning strikes at that property, not once, but twice. What did it blow out, Ron?
Some transformer in the elevator.
Cost us $26,000, man, because somebody didn't ground the transformer. So there's a $26,000 expense. None of the investors got a phone call about our 15 acres of prime acres, Class A, garden style, community, 2-acre dog park. Nobody got a phone call and said, hey, what do we do about the lightning strikes? We handle it internally. We're trying to get our 26 grand back, by the way. So anyway, those kind of things can affect our flows, right? But these are the kind of reports that we give you both monthly, quarterly, and annually. And if you need more information than that, all you got to do is call one of us, all right? So let me show you another deal that we got this year. Let me see if I can. And then we'll tell you some stuff in here like, hey, monthly potential income in 2018, we went from $1,420 a unit to $1,464 a unit. Now, you guys are like, man, $44, no big deal. Let me just show you what $44 is. Oops, calculator. Where's my calculator? There it is. I'm going to show you what $44 is. I'm going to multiply $44 times 5,000 units. That's 220 grand a month times 12. Because we don't keep these for 1 month. It's $2.6 million. Now I'm going to divide that by a cap rate of 6. It's $44 million. $44 million of improved value 44 million because I increased the rents $44. If I could do that on all my properties, that's why you need a lot of units. Okay, you want a lot of units. Did I do that right, Ryan? $44. I'm just fascinated with numbers, and I'm fascinated with real estate. That's why I'm doing it again. I know we're shooting a video and everything.
You're actually being conservative when you did the 0.6.
Yeah.
Because everything's trading for a 5 cap right now.
12. Yeah, well, I'm going to say, hey, because I'm a negative Nelly, right? Divided by 0.06. When it comes to money, man, I'd rather be conservative. Yeah, $44 million. At just a $44 a month increase. 44 is 44 million. Can you believe that? $44. If I could just raise the rents $44, I would end up with $44 million. And I didn't do anything except change the rents from 2014 to 2058. Or 1410 to 14, whatever the number is, 54. Okay, all right, so again, let me go back and see what else we got. I'm getting these emails just like you do. Those emails come from my office, Cardone Capital. I guess that's the last one just went out today. So about this time of the month, what happens is we send you a report each month about the 15th of the month. Today's the 14th. It's Valentine's Day. Hopefully you got your the Valentine you want in your life. Regardless of whether you got your Valentine's Day or not. And you guys need to get your cash flow right. Cash flow is the holy grail of finance. Cash flow is also the holy grail of rental real estate. You will never lose real estate as long as you have positive cash flow. You have cash flow and you're not over leveraged. Even when things get bad, things compress, maybe people start doubling up and moving in with each other. Some of my properties, there's no place to double up. I mean, the rents are $1,100. They can't go down from there. Even a $1,400 a month rent is very affordable for most people if the economy got crushed. But even if it did, and even if both of them got impacted, our cash flow will go down while we wait for the economy to improve again, and then boom, the rents surge. Okay, and when the rents surge, the real estate gets better. Okay, let me show you one more thing while we're in here. And again, if you got any questions, this video is free for you. Okay, I don't ask you to do anything. Maybe subscribe to the channel if you like this and you want more information. I'm happy to get it to you. If you have a comment, dude, if you like the video, give me a thumbs up. You know that always helps. And tell your friends that I'm doing this. I'm going to show you the fund that we have open right now. I've been trying to do this for years now. I've always thought it was horrible that
click on the photo.
I always thought it's horrible that only rich people get the best deals. And what I did was I created a fund for the everyday guy. And without showing any passwords or anything. Oh, there you go, okay. So I created a fund for the everyday guy. For years, the only people that I would let into my funds were the accredited investors that make 200 grand a year or more. We just opened a fund this year for non-accredited investors. Minimum investment, 5 grand. Targeted cash flow, 6%. Distributions monthly. Target hold time, 10 years. Targeted returns for the investors, 15% per year, just like our accredited investors. Okay, that's my goal. Can't promise you that I can get that. I have never been that low on any of my deals ever in my entire life. But who knows? I had to put something in there, so I'm like, told the SEC, I think I can do 15% a year. These deals are freaking phenomenal deals. This is the thing that I'm most excited about. If anything I've ever done in my career is giving the everyday person a chance to invest in unbelievable real estate. So what I want to do right here is I want to show you people coming into the fund, how they're coming in. This is a phenomenal piece of real estate. 36 acres, $92 million. I bought it with my money. And then what I do is I let people come in after me. So for a minimum of 5 grand, I'm gonna show you people coming in here right now. I don't want to show you any names of people, but I will show you how they're coming in. So, okay, this is, I'm just gonna show you this right here, okay, Ryan? This is, I'm not showing any names. $27 million has come in on this fund. It's only been open a month. Okay, 25 rows. I'm gonna go to 100 rows. Okay, and then I'm gonna start, I'm gonna start showing you. Okay, here's somebody just came in for $5,000. 14,942. I'll bet you this was a trust or a IRA, probably with the total. About 30% of our funds that are coming in are IRA. Okay, $5,000, $81,000, $69,000, $7,000, $5,000, $5,000, $5,000, $5,000, $5,000. These people know me. They've heard of me. They've read my books. They've been to my programs. They've done business. 10,000, 190, 5,000, 25,000, 10,000, 32,000. This fund's going to close out probably in what, Ryan? 2 weeks max.
2 to 4.
10,000, 5,000, 33,000, 90305. Probably transferred his retirement account over here. 20,000. Had a buddy the other day said, "Hey man, I got here he is right here, $75,000. I got it sitting in a cash account. I just want to shove it all in." And if you can pay me every month, great. But I trust that if I'm riding along with you, if you got millions of dollars in the deal, I figure my 75 grand is going to be safe. So these entries right here go on and on and on until we get a total of about $27 million. Here's a guy, $94,450, $10,000, $10,000, $14,000, $16,000, $70,000, $20,000. 20,000, 15,000. This was approved for me to do this. I had to get this approved by the SEC, just so you know. How do you do this? How do you take money from anybody? How do you take money from people, the everyday person, without being a bank? There's the Jobs Act in 2012 was amended last year because of people like me. Went to Wall Street and said, "Hey, you need to let the everyday guy invest in these deals, man. These are great deals. The everyday person, like most of my family and friends, hardworking Americans that don't have millions of dollars sitting around, private investors like myself said, look, the everyday person needs to be able to get into these kind of private entrepreneurial equity funds rather than just, doing what they do on Wall Street. It's not fair to the everyday person. I know that my mom could not have invested in my funds until the law was amended, not last year, but the year before that, where the non-accredited with SEC agreement, I can now use YouTube, Facebook, social media, phone calls, letters, emails, whatever, and say, hey, if you want to invest in my fund, do your research, there's risks, etc. And you can invest with me. So this is the first time in my career I've been able to let maybe my cousin, one of these people that I just ran through this list is a cousin of mine. He's a non-accredited investor. Even though he's my family bloodline, a year and a half ago he couldn't invest. Actually, a year ago he couldn't invest. 6 months ago he couldn't invest with me. Now he can. So there's an accredited and a non-accredited fund. The website's cardonecapital.com. Okay, you can get access to what we're doing. You can go there anytime you want. It's free. Cardonecapital.com. If you want a book, you want my book, cardonecapital.com/book. Read my real estate book if you're not investing with me. Really, I started this out today because I wanted the investors to know this is the report you're getting every week, every month. This is what the report means. If you have any questions, you can always call Ryan. Maybe we'll put his email, ryan@cardonecapital.com below. What else, Ryan? What else can I say here? 1,691 people have invested in this fund. And let me just go to the other one. We have 7 funds. Only 2 of them are open right now. And
I think you hit everything. One of the biggest things that stands out to me from our group compared to others is that the assets.
Yeah.
The quality of assets. If you guys look at the quality of this asset, this was $92 million.
I mean, here's a better picture of it, right? So
most of the other funds, 5 million, 10 million, 20 million.
They're buying
kind of
shopping
they're kind of
centers,
scraping on the bottom.
filling stations. They're all over the place. I'm not doing that. I'm buying one type of product. These are massive luxury apartments at affordable rents. $1,400, $1,800. These rents right here are $1,800 on this Stella deal in Sugarland. These are $1,800 a month rents in a neighborhood with $2 million homes. $1,800 may or may not seem cheap to you. I'd love to know what you think in comments. $1,400 a month in Delray. That may not seem cheap to you. It might seem expensive. But if you're coming from New York, Silicon Valley, if you're in Arizona, Scottsdale, if you're up in Denver, Chicago, $1,400 doesn't seem expensive. If you're in New York, this seems like a steal, like you're stealing something. So these are unbelievable properties, massive, what's called garden style, sprawling properties with lots of space. We really take care of our tenants, great customer service, and everybody wins in this deal, okay? The tenant wins, we take care of them the way I've been taking care of customers. Everybody wins. The tenant wins, the investor wins, and I'm gonna win, okay? It allows me, these funds allow me to expand my portfolio of properties from 5,000 to 10,000, 10,000 to 15, 20,000 properties. Our goal is to have 40,000 units. I wanna be generous with our investors because I'm gonna take the whole portfolio and do something really big with it, make a real big play, maybe with Wall Street, put the whole thing together and see if they're interested in buying the entire portfolio. And everybody wins in a big way, if you know what I mean. All right, so I'm gonna go have you know what I say, anything that's left sitting around will be consumed. If your cash is sitting around like cordial cherries, dude, get your cash to work. You guys that have equity in your home, get your equity to work. You need to earn cash flow, even if it's only 5 or 6%. If it's only earning 5 or 6%, and you have the chance to double or triple your money in the next 3, 5, 7, 10 years without losing it, these properties don't go away. They're not gonna disappear. You can't make them vanish, okay? This is not like a stock or a company. This cannot go away immediately. So if you like the idea of cash flow, if you like the idea of 2x or 3x return over the next 3 years to 7 years, and you love real estate, invest with me, man. I'll never let you down. CardoneCapital.com, CardoneCapital.com. If you're already invested with me, thank you for having confidence. If you have more cash sitting around right now, come in to these last 2 funds that we have open while they're open, while the law allows me to accept your money, because you never know when these crazy people up in DC change all the rules. Good luck investing either way.